Wall Street has just sparked a potential $180,000 Bitcoin mega pump, and the window to act is shrinking by the minute. Yesterday, Bitcoin smashed through another all-time high, detonating over $460 million in short liquidations and wiping out 116,000 traders in a single ruthless session. One trader, who must be a masochist, lost $51 million in seconds. If you're shorting Bitcoin in this market, I don't feel sorry for you at all. This wasn't just another big move. It was the kind of market shock that signals something much bigger is underway. Now, openly, some of the world's most powerful research desks are putting mega price targets on Bitcoin. This cycle, not years down the road. Even Bloomberg just flipped their Bitcoin display to show prices in millions. Yeah, it now reads 0.112 million instead of 112,000. That small cosmetic change signals a massive psychological shift. This market is preparing for seven-figure Bitcoin to become the norm. And if you're wondering if you've missed it or the real opportunity is still ahead, you're exactly in the right place. Today, I'll break down exactly what triggered this move, how the smart money is positioning, and what every serious crypto investor needs to watch next. Because if you thought this cycle was wild before, you haven't seen anything yet. To really understand what's happening, you have to look at the storm that's building in the background. America is facing a once-in-a-generation economic upheaval. The dollar is crashing, down more than 10% this year. It's the worst start since 1973. Well, what does that mean, Kyle? Imports get more expensive, commodities shoot higher, and the pressure on Washington to keep borrowing grows by the day. Now, layer on the debt crisis. US debt is so huge, the government is spending $1.2 trillion a year on interest alone. That's $3.3 billion every day, gone, just to keep the machine running. And in May, the deficit came in at $316 billion. The third largest monthly shortfall in American history. Now, guys, yesterday in the video, I showed you the chart that shows the dollar purchasing power decreasing and now rapidly falling. If you have any sense of economic understanding, you'll understand that your dollar doesn't go as far as it used to, right? You used to be able to buy a Snickers bar for a nickel, and now it's much more expensive than that. But anyone who has any kind of wherewithal in the market right now is understanding where we're headed in the market. Then you've got the policy chaos. President Trump is calling for a 300 basis point rate cut. That's 3 times the record COVID emergency cut, and something no president has ever even suggested. He claims it'll save trillions of dollars, but here's the truth. Only 20% of the US debt can actually be refinanced quickly. The real result, a possible surge in inflation, mortgage rates, and a new round of market panic. And yes, if this ever happened, assets like Bitcoin and likely altcoins would absolutely fly. Meanwhile, US stock market valuations are mind-blowing. The total US market is now worth $63.8 trillion. That's bigger than all of Europe, China, Japan, India, and most developed countries combined. And Nvidia just became the first company to ever hit a $4 trillion market cap. But here's the thing. As this is happening, the foundation underneath looks shakier than ever. Don't forget the political wildcards. Fed Chair Jerome Powell is facing calls for his resignation. Legal threats are flying, and the very independence of the world's most important central bank is suddenly up for debate. Now, I'm not sure if you guys are following me on X, and if you don't, I suggest that you go do that at Kyle_Chasse. If you live on crypto Twitter like I do, you would have seen these rumors flying around, everyone copying and pasting each other's posts, talking about how Jerome Powell could resign in the next few days. Now, I made a post yesterday saying how I think that's highly unlikely. Look, I would love for Jerome Powell to resign. I would love for a much more dovish Fed chair to come in tomorrow, cut rates to rock bottoms, and send our markets to Valhalla. The fact of the matter is, it's just unlikely to happen. So we will have to wait until Jerome Powell takes his retirement next year. But markets are forward-looking, meaning that it doesn't necessarily matter if Jerome Powell is continuing to be stubborn right now, because we know the next appointed Fed chair is likely to align with Trump's policies and his requests, and likely to be a much more dovish Fed chair. And markets are forward-looking. So we're already starting to see this priced in. This, along with the spending from the big, beautiful bill, all these things are converging to send our markets much, much higher. Okay, now let's zoom in for a second. Bitcoin just shattered every record, blasting past $112,000 and overtaking Google to become the 6th largest asset in the world. It feels good, doesn't it? But these numbers aren't the only thing that matters now. It's also about who's buying and how. ETF flows have changed the game. More than $50 billion has poured into spot Bitcoin ETFs since launch. And just last week, a record $7.1 billion came in. BlackRock's Bybit now holds 700,000 Bitcoins. These ETFs are vacuuming up way more Bitcoin than the global mining supply. That is a supply crunch that I've been talking about on this channel for years and aggressively for the past 6 months or so. And also, to top this off, in the comments, I've seen tons of comments about, oh, the supply crunch isn't working and it's, we talk about it forever and blah, blah, blah. Look, you're watching it happen in real time. Let's give this perspective. Gold ETFs took 15 years to reach 200 billion in assets under management. Bitcoin ETFs are on pace to get there in just 2 years. That's 7 times faster than what used to be the hottest ETF in the world. It's changing the guard. Wall Street isn't just buying Bitcoin. They're making it the new default. Even listen to what they called gold on CNBC.
Good time, trading more like gold, just in time for gold to rocket higher. You can see that physical Bitcoin gold is up about 9% over the past month in April.
Did you guys hear that? She literally called gold physical Bitcoin.
Physical Bitcoin gold.
It's completely flipping the script, right? It's like people used to call Bitcoin digital gold, and now they're putting Bitcoin front and center and calling gold digital Bitcoin or physical Bitcoin. All of this stuff is a wild perspective shift, but showing you that on Wall Street, things are dramatically changing. And Bitcoin is no longer just something that is magic internet money and used for nefarious activities. It is the Wall Street's prized possession, and the prized possession of so many corporate treasuries. I mean, we are seeing so much adoption of this Bitcoin treasury playbook that Michael Saylor started. And people are asking, Kyle, do you think that Bitcoin is going to become the world reserve asset? And I think it's already happening. If you look at it, I mean, we're going to talk about it a little bit later in the show, just how staggering the numbers are. But it's happening on a global level, not just in America. And it's not just MicroStrategy anymore. It's hundreds of companies, publicly traded and private, that are putting Bitcoin in their balance sheet. What they're doing is they're taking these companies are successful, right? And they've got cash reserves sitting there. That's their balance sheet. And it has always been sitting in like dollars or US treasuries or whatever, just sitting there. But with the dollar losing purchasing power and Bitcoin far outperforming the gains from treasuries, if you're managing these treasuries for these companies, you have to sit there and think, well, do I want to keep our value, our hard-earned money in a currency that is rapidly being devalued? Or do I want to put it in an asset that is rapidly increasing in value and that can't be inflated away? So do I think that Bitcoin is becoming a world reserve currency or asset? It already is. And you're seeing that happen in real time. All right, now let's talk about pain. Because yesterday, the story of the market was written in liquidations. Imagine waking up, logging in, and seeing your position gone. Just like 116,000 traders did last night. $460 million vanished, with one short trader losing $51 million in the bank. If you're shorting the market right now, I don't feel sorry for you at all, actually. I think you deserve it. Like, if you don't understand what's happening and you're putting shorts in on Bitcoin, you must be a masochist. You must love pain. You must love losing money, and you just, or you're just completely insane. Don't short this market, ladies and gentlemen. All the momentum is headed up. Like this kind of stuff is shocking, but people are always going to try to outsmart the market. But you You're not going to outsmart it when you're shorting Bitcoin. And this is a new feature of the Bitcoin market structure. Why? Because Bitcoin supply on exchanges is at a 7-year low. Just 14.5% of the supply is even tradable. When ETFs and corporations need to fill an order, they're pulling coins from an increasingly shallow pool. Every big buy moves the market further. Every squeeze gets more violent. Let me show you something for a second. Okay, guys, if you guys come over to CoinGecko, right, and you go check out Bitcoin, for example, and we scroll down here, and it's funny here that 7% of the people actually put a thumbs down on Bitcoin. What do you think? What are you doing? We're sitting at all-time highs. Never been more bullish. And I think these are the people that are leaving negative comments on these YouTube videos. I'm sure of it. Like people that just want to be negative for everything. How could you feel negatively about Bitcoin right now? It'd be mind-blowing. But what you can do is you can go down here and you can look at the 2% depth, right? And what this tells you essentially is how much money it takes to move the price of an asset by 2%, either up or down, negative 2% or positive 2%. And you can see right now that it takes about, Coinbase is the most trusted exchange on here. So it takes about $42 million to move the price of Bitcoin on an exchange right now. And think about how much inflows we're having every single day, how much people are buying Bitcoin every single day. I mean, yesterday alone, there was $215 million. That's 5 times this amount. Now, it wasn't bought all at once, and a lot of that's bought over the counter, so it doesn't affect the price directly. But as these Bitcoin get taken off, these order books get thinner and thinner, and eventually people will have to go make these orders. That's when we're going to see complete and insane aggressive pumps in the market when there just isn't enough Bitcoin for people to buy. So they're forced to go to exchanges and buy it. And, I just got a notification, all-time high. Again. I was gonna say yesterday we hit all-time high, but we just did again right now. Congratulations. Feels good, doesn't it? But anyway, the point is you're seeing this happen right now. It's very low liquidity compared to how much money is being bought every single day. And that's why in 2025, a red candle has become a transfer of wealth from anyone slow or over-leveraged directly into the strongest hands in finance. Guys, and you shouldn't be trying to outtrade this market. Just hold high conviction plays. Everyone I've ever met that's been super successful in this industry has made investments either on the secondary market, in high conviction plays, or in primary early stage companies that did extremely well. But I've never really, at least not that I can think of, met someone that I know that made a majority of their money from trading and outsmarting the market. So guys, as you know, I'm not a trader. I think that trading is incredibly difficult. Everyone that I've known has made money from holding. But this is why I use an algorithm like our partners at Sequence. And I just want to show you because people are asking in the comments, and today is a 4-month anniversary from the time I opened this. So if you don't know, I started with 1 Bitcoin. And right now I've got 1.048, almost I've gotten almost 0.05 Bitcoin in 4 months. This thing's trading and getting me about 1.25% or 15% a year on free Bitcoin. It's doing phenomenally well. And I'm probably going to allocate some more to it. So if you guys want a way to accumulate more Bitcoin, but you don't have any more cash, this is an amazing algorithm. How to do this are in the description below. It's awesome. The new reality is that ETF spot volumes now make up a record share of all Bitcoin trading. Every dip is met with a buy, and every panic sell is instantly absorbed. This is high conviction, it's structural demand, and it's relentless. Every ETF order that fills soaks up liquidity, creating a feedback loop where every new high pulls in more flows. And every new sell wall is torn down faster than the last. If you feel like every move is more extreme, it's because it is. And when you zoom out to last quarter, it gets even crazier. Companies added 159,000 Bitcoin to their balance sheets in quarter 2 alone. That's up from just 95,000 in quarter 1. That's a 60% gain quarter over quarter. So when I say that Bitcoin treasury strategies for corporations is rapidly accelerating, you can see it. And what is Q3 going to be? It's probably going to be even more, right? If we continue this trend, it goes absolutely parabolic. Now you're starting to see the big picture. And it's not just tech companies or Wall Street piling in either. This quarter, Eric Trump's American Bitcoin Corp raised $220 million from private investors, with a portion of the funding coming as direct Bitcoin purchases. They're planning to use that cash to grow their Bitcoin reserves and to buy more mining gear. Plus, they've already lined up a public listing on NASDAQ for later this year. When you've got political families, media empires, and blue chip miners all racing to stack more Bitcoin, you know this isn't just a bull run. This is a high stakes land grab. This is like musical chairs. Who's going to scoop up all Bitcoin before everyone else does? And if you think that's big, get this. NASDAQ listed K-Wave Media in South Korea just secured $1 billion for a new Bitcoin treasury strategy. That's another mega stamp of approval over there in South Korea. We call that the kimchi pump. So on the corporate side, momentum keeps building. Murano, a NASDAQ-listed company, secured up to $500 million to create a new Bitcoin treasury and has already begun its purchases. Also, you've got Metavesco and Royalty Management have both launched similar treasury strategies in the past month. It's getting to a point where it's really hard to keep track of all these new corporates buying Bitcoin. It absolutely blowing my mind. So let's break down what's really happening under the hood. Right now, funding rates for perpetual futures are sitting around 0.007 to 0.01%. What does that actually mean? Well, it's like a pulse check for market sentiment. When these rates are in this zone, it tells you traders are betting on higher prices. They're bullish, but we're not seeing crazy leverage or out of control greed either. This is healthy. It's confident, conviction buying. Now, open interest, that's the total size of all active futures bets, hit a record $72 billion. Why should you care? Because when open interest is this high and funding rates are steady, it means there's a ton of firepower in the market, but not everyone's already all in. This is the kind of environment where moves can get explosive fast. And if the tide turns, in other words, the stage is set for another big move. And this time, nobody's asleep at the wheel. Now, guys, let's get into the altcoin pain. Now, yes, altcoins finally had a nice bounce, but keep in mind, Bitcoin dominance is near 64%. Most alts are up in dollars, but down and sometimes brutally against Bitcoin, especially when you zoom out. The decoupling chart tells the story. Bitcoin has been leaving the rest of the sector behind. But here's the thing. Every major cycle, when dominance peaks and the crowd gives up on alts, we see one of two things, either total capitulation or, and this is what I think is happening, the beginning of a violent rotation. The dead alts narrative gets loudest right before the tables turn. And believe me, guys, it has been loud lately. Every time friends of mine even mention altcoins on YouTube, the comment section turns savage. You can feel the frustration. The alts are dead crowd have been getting nastier and nastier. And it's not just comments on YouTube. I'm in a lot of private Telegram and WhatsApp groups with guys that have been in the space for a decade or a long time, right? And even for them, they're questioning whether alts ever come back or not. And I'll tell you, historically, when you have market apathy like this, when even the most experienced traders who have been around for multi-cycles are starting to give up, this is the time to buy. Remember, be greedy when others are fearful, be fearful when others are greedy. See, back in 2017, Bitcoin dominance peaked just before Ethereum, and a handful of other majors exploded 10x or more. In 2021, the ETH BTC bottomed, and then the altcoin run began almost overnight. And if you're paying attention right now, Ethereum's quietly building a similar explosive setup behind the scenes. ETH futures open interest just flipped Bitcoin for the first time this cycle. 62.1 billion versus 61.7 billion. On top of that, 7 massive wallets scooped up 127,971 ETH in just 24 hours, aggressively stocking inventory at current levels. Meanwhile, flows into spot ETH ETFs are running 34 times faster than new ETH issuance. Let that sink in for a second. ETH is being scooped up way more aggressively than it's being created. Also, let me show you something else. Check this out. So if we look at the ETH ETF flows from yesterday, you had $211 million coming in yesterday in the ETH ETFs on July 9th. Now look at Bitcoin's $215 million yesterday, almost on parity. I mean, historically, Bitcoin has always brought in more money than Ethereum, but what you're seeing now is a complete shift. And what do you think is happening to create this shift? Well, The guys at BlackRock and Fidelity and others are having discussions with their investors and saying, hey, Rick, so you know how we told you to get into Bitcoin last year? Yep, that's great. Bitcoin was great. But let me tell you how these crypto markets work. See, there's always a rotation and Bitcoin usually leads the way. But when Bitcoin dominance starts to drop off, Ethereum starts to take the lead. And this is what creates what we call altcoin season. Imagine them explaining it to these guys who have no idea what they're talking about. Anyway, Rick, look, the point is that we think that we should start aggressively allocating to Ethereum right now. Okay, Bob, that sounds good. Let's do that. These are the conversations happening right now with these investment advisors and their clients. Okay, so now let's jump back to that $180,000 price target we talked about in the beginning. Wall Street's revealing how much capital is still waiting on the sidelines. Matthew Siegel from Van Eck dropped his price target and says that this is a supply-demand arms race. Every dip, every wave of panic just lets more institutional money accumulate. This is why you're seeing ETF flows outpace gold, why corporate treasuries are stacking, and why each dip gets bought faster than the last. In 2021, retail bought hype. In 2025, the world's biggest asset managers are buying conviction. It's completely different. Safe havens are changing. The dollar is weak. Deficits are historic. Equities are bigger than continents. And even the central banks are feeling political heat. Investors are looking for safety, for scarcity, for something that they can trust. Bitcoin is now the place where retail, institutional, and sovereign money are all converging. For the first time, Bitcoin isn't a side bet. It's the main event. Guys, real quick, I want to take a minute to thank the channel sponsor, BloFin, which is a great exchange. I use it all the time. It's a no KYC exchange, meaning yes, even Americans can use it. And they're currently hosting a massive trading competition worth an incredible $4.2 million in the prize pool. So if you guys are a trader, get over there, start trading, and get your chance to win that $4.2 million. They're also giving away a Cybertruck. So all you guys got to do is use my affiliate link in the description below. It really helps the channel. It helps me a lot, guys, so I don't have to bring on really crappy projects to sponsor the channel. I try to give you guys just the best ones that I actually use myself. And BloFin's been great. Their reputation is excellent, and they're growing really, really quick. They've got a huge list of things you can trade. You can go long, you can go short, you can leverage, you can do spot, whatever. Go check them out. All right, back to the show. Let me get personal for a second. I remember back in 2017, ETH was trading sideways. Everyone had given up, and I almost did too. Then in weeks, the ETH BTC exploded, and people who stuck around made absolutely life-changing money. The lesson? The crowd is always late. The winners are the ones tracking data and have the conviction, not the ones just following hype. In every cycle, the market gets faster, the risks get higher, but the opportunities also multiply. If you're here, you're researching, adapting, and not getting emotional, you're already ahead of everybody else. But guys, let me just give you a word of caution. With all this bullishness, no cycle is bulletproof. We have to be careful of things like black swans, wild regulation, Fed shift, geopolitical disasters, whatever. But I just wanted to say that because these things can happen, they have happened, and it's potential that they are happening. So I guess what I'm saying is like, if you're looking at holding these major high conviction plays for the long term, you can easily stomach if something like a black swan happens, right? But if you're trading with high leverage, you have to be very careful because you can get these scam books and they can take you out. For those of you guys who have been with me for a while, we've all watched the crypto winter. We've bared through the whole thing, and a lot have doubted if we're ever going to see an alt season again. But now you're here on the edge of a historic shift in global capital. Don't waste it. Don't get distracted by noise. Stack conviction, stack research, and let everyone else argue over narratives. If you guys missed yesterday's show, you missed the exact Wall Street playbook the pros are running. Catch up now, because by the time everyone else figures this out, the real opportunity will be gone. And guys, if you got value from today's video, do me a huge favor, destroy the like button. If you're new to the channel, what are you waiting for? If you like this video, there's many more to come. Hit that subscribe button, hit the bell notification so you get notifications on all the videos. Share this video with your friends and family, anyone who's not fully convinced we're going into a wild bull run right now. And always remember to stay sharp, stack your Satoshis, and probably some ETH right now, and I'll catch you guys in the next one. See ya.